If you call yourself a trader or an investor, but you don't look at sentiment, what are you doing? Market sentiment can be the ultimate cheat code if actually used correctly. So in this video, I'm going to show you what you've been missing. Now, hold up. This is absolutely not a video selling you a dream or a strategy that is going to change your life. Well, maybe it could, I guess, in theory. But I don't think of it as a strategy. I think of it as a tool to help identify higher probabilities, and that's it. I personally just trust using probabilities to my advantage and then broadening out my time horizon just to let them work. So we're not talking about something that's going to work for you tomorrow. We're talking about something that probably could work for you if executed over a very large period of time, simply because there's a higher probability of one thing over the other based off historical data, but that doesn't mean that this specific time is going to work. That being said, what do I mean when I say sentiment? Well, up now is a picture or a depiction of the AAII Sentiment Survey, also known as the American Association of Individual Investors. And every week we get a poll, or a poll is taken. Data is then released publicly so we can see what this American Association of Individual Investors on average are feeling or thinking about the next 6 months in terms of returns in the stock market. Do they believe returns will be bullish, neutral, or bearish? And when we get this data, these numbers have been tracked for many years, and we can see the spread or the difference between bullish and bearish sentiment. So for example, if bullish sentiment is 20% and bearish sentiment is 50%, that is a spread of -30. Negative because it's more bearish than bullish. And if it was the other way around, 50% bullish, 20% bearish, you would have a positive spread of 30. Okay, so cool, but what do these numbers mean? How are they actually a cheat code? I think the answer here is quite simple. Probabilities. Just like there is a higher probability that you're going to sign up with an Ironbeam account because they are the sponsor of today's video.
Welcome to Ironbeam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Ironbeam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Ironbeam brings the future into the present. Join now and augment your trading experience.
Now here's a chart of the past couple of years of the AAII Sentiment Survey spread. So what we're looking at is a line that is showing us what the spread is. So is it +10? Is it -30 based off the percentage bullish versus the percentage bearish? What then can be done, as shown in this chart, is we can extrapolate the returns 3 months after a reading, 6 months after a reading, and then 1 year after a given reading. And they separate into a couple different quadrants based off of standard deviations away from the mean. And long story short, when sentiment is extremely bearish or even just notably bearish, meaning we have a negative in terms of our AAII spread, we tend to see pretty strong positive returns 3, 6, and 12 months down the road. The only exception is when we have exceptionally bullish AAII spread, and we see there that on average 3-month and 6-month returns are roughly around even, but even negative returns 1 year out from a very strong bullish sentiment spread. So what's the practical application of this? It's really, really good in bearish sentiment situations. So in times when people are scared and when people are fearful, we tend to see higher bearish sentiment. Market returns tend to be best and above average during the times that we have very bearish sentiment. Again, 3, 6, and 12 months down the road. For a true edge on the downside or betting on the downside of the markets, you really need a very strong correlation of bullish sentiment. Now, I think this is partially due to the overwhelmingly bullish bias that the overall markets have. I mean, think about it. On average, these sentiment surveys come out, and on average, sentiment is 37.5% bullish and 31% bearish. And that's like total lifetime average, not what we see last week. So can you trade off of this? You absolutely could. Just understand that we're talking here about averages. We're not talking about this time is going to work, next time is going to work, this time is not. And at the same time, take into consideration that when sentiment is very bullish or very, very bearish, and we have these correlations, we're looking at 3, 6, and then 12 months down the road based on the graph we presented. That doesn't mean that tomorrow is going to be down or up, or let alone next week. I mean, this might not be the best indicator for someone who is a scalping day trader, but it could give you a better picture based on probabilities of what's going on big picture and what's more likely to happen in the broader markets than not. Now, if you're a trader and you're wondering whether you should be swing trading or day trading, the video up on the screen now is perfect for you. Check it out, and I'll see you guys in the next one. Peace.